Let's be honest with each other. Traders have been getting a little ridiculous. Everywhere I look, I'm seeing traders say, stocks going up, stocks going up, stocks going on up. I don't believe we are going to see this market be able to continue to hold. Right now, I want to be able to break down every single reason on why I believe that the market is going to start turning as we head into July and as we head into the August. First thing I want you guys to realize is, why do people lose in the stock market? The number one reason why people lose is because they chase. They get involved in plays that have already made their moves. We could think about the cryptocurrency as a perfect example. When we saw Bitcoin go all the way up to 77,000, it was a very tough FOMO. And what's FOMO? Fear of missing out. Our mind is saying, I can't believe I'm seeing all these people make money. I can't believe I'm seeing everyone make cash. This guy that I went to high school with just made $100,000 placing money in Bitcoin. Bitcoin keeps going higher and higher and higher, and everyone keeps buying it, buying it, buying it. And that makes you feel like, I can't believe I'm missing out on this. Now let me go get involved. And you end up buying Bitcoin when it's at 77,000. And guess what happens? Since you're at the top, it ends up going on a very big crash. Let's take another look at an example. Let's take a look over on AGLE on a very small example here. We see that AGLE ran 700% this morning. We see that AGLE is going higher and higher and higher and higher. And it's like, man, everyone's making money on AGLE. Let me buy in on it. And then it ends up crashing. If you are a trader that seems like every time you buy into a stock, it goes in the opposite direction, it's because you are letting your mind basically trade for you. You are letting your eyes trade for you. You are saying, I only want to buy stocks that are up and extremely overbought already. Because that's what it kind of seems like when you're a rookie trader. When you're a new trader, you don't want to buy stocks that are falling. You want to buy stocks that are up very high, that's made people a lot of money. But that's the issue. You are buying stocks after they have already spiked. You have to train your mind to be able to realize when stocks are now at the top, they are overbought. Overbought stocks are now what people lock in profits or look to do the opposite way. People don't make money by buying stocks at the top. People make money by shorting stocks or doing put contracts at the top, and then people make money from dip buying the bottoms. No one makes money when buying at the tippity top of something. That's why when you think about the Great Recession back in 2008 and we hear about Michael Burry, he made billions shorting the top. And then people who bought at the 2009 and 2010 bought houses very cheap and very low. Imagine how much money they made. You basically have to go against the grain a lot of times in stock trading. And that's what I do. And that's how I've been able to make so much money in the stock market, by going against the grain. By basically, when people are saying, oh, this is going to go up forever and ever and ever, that's the time that you probably want to start getting out of the play if you're in on it, or start looking for the opposite way. So let's go ahead and let's take a look over on this here, team. When I take a look over on the S&P 500, and I see that the S&P 500 has been consistently climbing for a while now, for the past few months. 1, 2, 3, 4 months in a row, we have gone on a very nice climb. It's probably time that we are going to get some sort of pullback. Let me bring this on over. This sounds very good, doesn't it? This stat came out last Friday. The S&P 500 is nearly up 3% on the week, its best performance since March. Its S&P 500 has its 5th positive week in a row, the first such streak since November of 2021. The benchmark is now up 26% from its bear market low. The NASDAQ composite is nearly up 4% on the week, its best week since March. The NASDAQ is up 8 weeks in a row, its best winning streak since 2019. Both the NASDAQ and S&P 500 were up 6 days in a row through last Thursday. The Dow Jones Industrial Average was up 1.6% on its week, its 3rd positive week in a row, and the S&P 500 and NASDAQ are at their highest levels since April of 2022. When you read that, what does it scream out to you? Oh wow, the stock market is amazing, let me jump in on it. To me, it screams out, warning, all these are breaking records. When you break records, you're at the tippity top. Now guess what's going to happen? It's going to most likely have a pullback. If everyone says, hey, this guy just ran 500 miles, the most miles anyone's ever run, the last guy who ran 499 miles died, would you guys put a bet that he's going to run another 500 miles? I would make a bet that he's probably going to collapse in the next 10 miles or so, because he's most likely going to get extremely tired. You don't want to keep adding at the top, right? So while this sounds very appealing, it's also, again, a big recognition to us that we're most likely going to be at the top. And we can also see that we're at the top through psychology by saying, oh, wow, we're at extreme greed. When you start hearing the world start saying, oh, yeah, we're going up forever. We're going up forever. We're going up. We're going up. Don't miss out. We're going on up. That's the mob speaking. The mob is the majority of buyers. We know that 80% of stock traders are going to end up losing. So the thing is, once everyone starts chirping, we're going to win, 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 it's going to go up forever, ever, ever. That's usually the time that I start taking my profits, because that's the time that we start seeing things turn back on down. We start seeing extreme greed. We start heading back on down to extreme fear. When we're in extreme fear, that's when we want to get involved. Guess where extreme fear was at? Extreme fear was at when we were at 350s, when we're at the 360s. Extreme fear is when we're at 240s. So we want to buy in extreme fear because that's the best dip buying opportunity. We want to sell at extreme greed. That's when we start dropping on down. Let's take a look at a different visual here, team. Do you guys honestly believe it is a good time to get involved over on Netflix right now? Well, Netflix has been spiking from $176 all the way up to $424. Yes, we've spiked about $250 since August. I don't think it's probably the best time to get involved in this play. Meta, since November, has been going on nearly a straight up $200 climb. NVDA has gone on nearly a straight up $300 climb. Apple has gone on a record high climb here, and we are currently sitting up near the record highs of 185, 186. If we are getting involved in these plays, we are getting in at the worst areas. If we want to get involved over on these plays once again, not only from everything I said from a psychological aspect, not only from a chart aspect of visualization, we can also just take a look at the RSIs. The RSIs can really just speak a lot of volume towards us, make a lot of sense to us. I know that when I read an RSI, anything that's over a 70 on the RSI is considered overbought. Anything that's under a 30 on the RSI is considered oversold. Whenever we are overbought, like right here, guess what happens to Netflix? It starts falling on down. And it falls on down until we have a 30 on the RSI, which means we're oversold, which means we move on up, which means, again, we do it until we're overbought, on where we have a 70. Then we fall on down. We were just at an 86 on the RSI. Guess what's most likely going to be happening? We're going to be getting that drop. Type in any of these plays. Type in Netflix. Type in NVDA. We have a 71 on the RSI. Take a look over on Tesla. We were at a 90 on the RSI before we had a nice dropping day yesterday. I believe that a pullback has to be coming on up. So for anyone that wants to look for maybe one more pop in the market, for anyone that wants to say, hey, Deck, okay, if the S&P 500 gets up near 440, 445, 450, and you do a put contract towards the end of August expiration, I think you have a 90% chance of winning. I really do. Now, could the stock market do whatever it wants to do? Absolutely. But Deck, is that all you got for us? Is psychology all you have? Is FOMO all you have? Is chart reading all you have? Is chart visualization all you have? Well, no, I got a little bit more for you. We also know that Jerome Powell's speaking at this time. Jerome Powell, he paused interest rates, and he just stated that we are only at 5% with inflation. Guys, remember, our goal is at 2.5%. This is why the market started turning yesterday so bad. We can take a look at this article right here, and we can see to ourselves that we have a goal at this moment to bring inflation down to a rate of 2%. Right now, we're at 5.3%. Inflation has moderated somewhat since the middle of last year, but nonetheless, inflation pressures continue to run high, and the process to get inflation back to 2% has a long way to go. He stated that we are going to be raising rates throughout 2023. The S&P 500 fell from 480 down to the price of 350 because we raised rates. In 2022, we raised rates 0.2, 0.5, 0.75, 0.75, 0.75, 0.75, 0.75, 0.5, 0.25. Now, we've paused rates. Market's got on a nice little pop. But he just stated we're going to raise rates again. So what do you think is going to happen? Let's put it in a different analogy. Let's say for a whole entire summer, you sit on your couch, you eat candy bars every single day, and you never lift, you never exercise, and you gain a ton of weight. What happened to you? You got extremely fat and you got extremely obese. Okay, that's what happens. Now, let's say one summer, you don't eat anything unhealthy, you are extremely active, and you got into great shape, right? It's basically a cause and an effect. If the SPY has low interest rates, we go on very big spikes. If we have high interest rates, we go on very big drops. We pause interest rates, we start going on spikes. We raise interest rates back on up. What do you think is going to happen? The same thing that we happened last time. It's most likely going to start dropping back on down. So he already stated we're going to have it. And then today, guess what we saw? Bank of England surprises England with 50 basis point rate hike to tackle persistent inflation. This is what's coming up next for the United States. So make sure that you guys are aware of this. So the thing is, team, I'm only stressing this so much because I really want every single trader to just see what I see. And I literally say this stuff and people are like, no, Deck, I think NVDA is going up higher. Why? Well, AI, artificial intelligence. That's why. Right? So the thing is, team, I get it. AI has hype. I get it. The market's moving on up. But don't be blinded. Don't be blinded by the fact of greed of, oh, let me just keep on holding and hoping. Because how is that working out for everyone else who has held and hoped on NFTs, on Bitcoin, on whatever, GameStop, AMC, right? You want to make sure you're putting yourself in on good positions and getting out at good positions. That's what it all comes on down towards. Take this information, run with it, crush it in the market, guys. You guys got this.